All right, so let's go ahead and jump into chapter 3. Okay, here's the good news on chapter 3. Okay, if you understood chapter 2, because I had a lot of people telling me they understood chapter 2 a little bit better than chapter 1, but if you understood chapter 2 when we were working with the T accounts, if you understood that pretty well, then chapter 3 is going to be a breeze for you. Okay, if you still struggled with the things in chapter 2, that's okay because the concepts are going to be the same. So you're going to get a chance to really get a better grasp of that because all we're doing is we're doing it a different way. Okay. We're going to go from looking at it in the T accounts to looking at them and journalizing them. Okay. So we're going to talk about recording transactions in the general journal. That's what we're going to do today. Says a form for recording transactions in chronological order is called a journal. Recording transactions in a journal is called journalizing. So everything that we do in our journal, we're going to have to make sure that we do it chronologically. Okay, so just know that everything's going to have to be in date order. Here's what a general journal looks like. Obviously, we have the title at the top. We have the number, the page number, top right corner. Then we have our date column. We have a column for our account titles. We'll be using our document numbers. Later on, we'll come back and use that post ref or posting reference. And then we have a spot for our debits and our credits. Okay. Obviously, we see our debits are on the left and our credits are on the right. Our debits always come first. Okay. So a general journal has to be accurate. Again, it has to be a chronological record. We also work in what's called double entry accounting, okay? And all that means is that everything has a debit and a credit part, okay? That's why it's so important to make sure that we always have a debit and we always have a credit, and those debits and those credits should always balance out. It says information for each transaction recorded in a journal is called an entry, and that the recording of debit and credit parts of a transaction is called double entry accounting. Says a business paper from which information is obtained for a journal is called a source document. I think they're going to give us some examples of source documents. One could be a check. Okay. All that source document is going to be is it's going to be a way for us to go back and verify. So if we want to find out about this transaction on line 1, when we look at document number, there's going to be a code to tell us how we can verify exactly what that is. So that if our numbers aren't matching up, we can go back to the source and see if maybe we just recorded something wrong. Okay. So one of those source documents is a check. And so obviously we would write the check, we would give part of that out, but on the left hand side, that check stub, that would always stay with us. And we record the same information on that check stub that we would on that check that we were presenting to somebody for payment. So that if we ever need to go back and reference check number 1, we know we wrote it for $165 to East Side Supplies on January the 2nd and what the purpose was, okay? Says that a business form ordering a bank to pay cash from a bank account is called a check. Another source document would be an invoice, which is a form describing the goods or services sold, the quantity, the price, and the terms of sale. So here's an invoice for Delgado Web Service. They sold website design for $500 to Main Street Services. They did that on the 12th, and they're telling them they have 30 days to pay it. Okay. Another one would be a sales invoice, an invoice used as a source document for recording a sale on account. So if we're selling something and we're extending credit, this is what we'd be able to extend a sales invoice to people. It's also known as a sales ticket or a sales slip. A receipt, which is a business form giving written acknowledgement for cash received, would also be another source document. So you receive cash from somebody, you give them the right hand side just as a copy for their records. But again, we'd have the left hand side for ourselves. A memorandum, which is a form on which a brief message is written to describe a transaction. Okay, so let's say that this one we bought supplies on account from Kane Office Supplies, but maybe we did that over the phone, and so it was before the advent of email, and so maybe we don't have an email receipt coming in. So things like this we can write on a memorandum, and that serves as our source document. And then I think the last one would be calculator tape. And so what this would be is this would be all of the sales that happened on January the 10th, and it's just totaling them all up. And now ticket tape number 10 on January the 10th just shows that they had $1,100 in sales. Okay. So when we're preparing our journal entry, we're going to want to mark where it's a book of original entry. It's a permanent record. It's a record using ink and not pencil, and we're going to use 00 to denote even dollar amounts. Okay, so as far as a cent. So here on this one, we received cash from owner as an investment of $2,000. Again, these are just going to be repeats of what we did with our T accounts, but let's talk through them the same way. So what two accounts are we dealing with? Yep, which is starts with the C, capital, right? So we're going to be dealing with cash and with the capital account. Which one is going to be debited? Cash is going to be debited, and we're going to credit our capital account, okay? When we're journalizing things, our debit still comes first. So it's always going to be on top. Okay, there's our T accounts like we did last chapter. And here we are again. We're going to put the date, so January dot, and then the second in the other box. Cash is going to be listed first only because that's what we're debiting. Okay, our debits always come first. Then we're going to put our source document. It was receipt number 1. So we're going to abbreviate that by saying R1. That way, if we need to go back and reference that, we know we can go back to our receipt book and look at the first our receipt stub. And then $2,000 is debited. And then for our credit, it's going to be Michael Delgado's capital account for that same amount, okay? Another thing to recognize with the credit is always going to be indented. For us, there's nothing that we have to do in the system to do that indenting. We don't have to tab or space. Once we put it in and we put the money in on the credit side, it's going to automatically indent it. But if we were doing it by hand or something, just know we have to indent our credits. Okay? So like I said, same thing as what we did with our T accounts. It's just now we're doing it in written form. Now we paid cash for supplies for $165. Which two accounts? Cash and supplies. Which one are we debiting? We're going to debit our supplies account. So it's going to come first. Now, as long as we're on the same page of our journal, we no longer have to list the month unless the month changes. So because, see how it has a break there? They just don't want to list everything as far as on the page. There's like a white space above the 2, above line 3. They just don't want to have to list everything. So we still have January from the previous one, if it'll show up. See, we had January listed on lines 1 and 2. Now on lines 3 and 4, we don't need to list the month because it's still January, but we do need to put the date. So we're putting the second. We said we were debiting supplies, so it comes first. Check number 1, so C1 is our document number, and then we debit for $165. Cash is going to be credited for that amount.